us on the show. He's the Senior Executive Vice President at Kotak Mahindra. Thank you so much for joining us today, this morning, Rohit. And it's good to talk to you on what should one actually do when you talk about the sectors, especially. We spoke about consumption in this entire series. We did speak about the financial sector. We also today we will be talking about the manufacturing space as a whole. So you tell me, what should one actually watch out for in this union budget when you talk about manufacturing, because that's where most of the focus has been of the government, and it has actually reaped quite a lot of benefit when you talk about the way how it has helped boost the GDP growth as well.
Hi, good morning. Well, as rightly said, the focus of this government has been on manufacturing through the budget document, and also apart from the budget document, various measures that they have been taking. We find no reason to believe that that trend will not continue, because India, where on the GDP side, the manufacturing which contributes early teens to the GDP, you should expect that in the next 5 to 7 years or maybe 10 years, we'll be going closer to 18 to 20% of GDP. So that means that the incremental growth rate has to be higher on this side for the share or the contribution in GDP to go up. That's a simple math, right? So I do not see any letdown on the focus on manufacturing, the focus on Make in India, the focus on trying to reduce import dependence and trying to make for India and make in India. We believe that that trend will continue. Of course, we have seen that government is very unlikely to meet its capex targets for this year, which they had announced in the last budget. That is to do a lot with the central elections that happened, because activity takes a backseat. That is starting to go up month on month, but still we believe that it will still fall short of their budget for last year. However, going forward, they will still be, in our opinion, budgeting for a good capex, and incentives and SOPs on the manufacturing side will continue in the budget, and also from the budget, where the government is very keen on trying to make India self-sufficient in a lot of items which we are currently importing.
So, given the fact that you are also of the view that the government will continue to put this thrust on the entire manufacturing space, but when you talk about the manufacturing space, it's pretty vast. Of late and over the last few years, we've seen the emergence and the dominance of the EMS sector as well. When you talk about manufacturing, you have various softs under the PLI scheme also given to that particular space. Apart from that, you have the government's thrust on defense manufacturing. Atmanirbhar Bharat has been their motto, their goal and their call. And then now you have renewable energy manufacturing as well, where you have a lot of focus of the government. So when you talk about all of these sectors, when all of these sectors are into manufacturing, as an investor, which is the sector that you think is the best placed and one should bet on if they have to build on their wealth or returns over the years, for the longer term, that is?
Sure. We believe that within the whole manufacturing space, it needs to be a very good approach of a basket, where the whole sector or all the segments will make money for you. Basically, you have to go overweight the whole manufacturing space rather than picking and choosing one segment. Of course, I would say that I would like the EMS space to be more overweight in somebody's portfolios, followed by renewable energy, followed by defense. But as a whole, you would have to be overweight the whole segment, because what happens is, when a segment which was hitherto not available for investment, or the companies were very small, in that segment, you would see companies going from 500 crores of turnover to 5,000 crores of turnovers in 5 to 7 years. And hence, it will be very difficult to initially establish the right valuation metric for them. And hence, you need to have that basket approach. Within that, when you said, say, EMS has had a very good run. The stocks have corrected recently, and within that space, there are a few companies which are very attractive. We have to keep in mind that within EMS, it is not just the PLI on mobile, which has been a great success story already, but there will be more success stories within EMS. There will be big AC players, big other players, washing machine players, other players that will come up. And the next within that space will be the semiconductor space, where I think this focus of the government is very large, where we want to make chips which are made in India. And hence, we believe that on that space, government is already, that is also actually a part of EMS. Within EMS, mobile PLI has been a great success. Now it is time to move from mobile PLI success to other successes within the whole space. And I think that success will come more from the semiconductor value chain to start with. Apart from that, we are also very bullish on the renewable space. If you look at the renewable space, especially say solar more than wind, where we believe that the solar capacities in India can go 3 to 4x in the next 5 to 7 years. Of course, you will have some threats from China where you can actually import a lot of these things cheaper from China. But to develop any industry, as in the case of mobile, PLI was provided. In the case of solar or renewable energy, a lot of other duty protection will be initially provided to make sure that some of the companies in this space, they gain scale. And once they gain scale, pricing competitiveness comes back on its own because of economies of scale and other procurement benefits. Then the benefits that are given or provided by the government can be slowly taken off. But within EMS, semiconductor, then renewables, followed by the typical make in India is what we like. And let's not forget, even autos. Yeah, we tend to believe that autos is old school. We just recently saw one of the companies talking about making EVs in India for exports to the world, right? That will happen. That will already happen. Currently, ICE vehicles are getting exported from India. Now, in a year or two, or maybe three, a lot of EV vehicles will get made in India and get exported to the world, and they will obviously be lower cost, and it'll be very, very beneficial for the country.
But Rohit, you did speak about the segments of the sectors that in manufacturing, why they will benefit, and which are the sectors now emerging that you need to watch out for. Like you said in the EMS scheme, EMS theme, you need to look at now semiconductor, because that's where also the government thrust is at. But this is about the Indian manufacturing sector and the policies that are actually helping the space. But let's not forget that you have a lot of global factors also that will actually impact most of these counters also, which tend to export globally. Now that you have Trump administration, every day you have new rhetoric about tariff or actually stopping or freezing those sort of incentives, given the fact that he did speak about how he wants to kind of impose tariffs on pharmaceutical producers, or even the fact that he wants to manufacture defense at home. What does it mean for all these companies? Do you think that they hold a significant, or these sort of news developments are very significant for our Indian manufacturing sector? Or you should just stay clear of it, not bother about it, and continue to actually repose faith in our manufacturing space?
Well, we should continue to post faith in our manufacturing space. First of all, simply because some of the new initiatives on manufacturing that we are talking about has not got too much to do with the US, right? We are not likely to export what we make on manufacturing to the US. The current thrust on manufacturing that we see is more to do with replacing imports itself rather than exporting to the US. Apart from pharma, which you mentioned, is not necessarily a new sector, but an old sector, where within pharma itself, if you see a lot of Indian companies have their facilities in the US, they've acquired companies in the US, and of course, it would not be prudent to believe that all of their facilities will eventually land up in the US, because obviously then they will not be cost competitive, and US itself would not be wanting that, because it will raise drug prices for them. So without getting into too much details, because we are not US experts, it would be safe to assume that, of course, a lot of statements have come out, but that may be a nudge to open a few more facilities or manufacture a little bit more in the US rather than everything shifting to the US, because that's not possible. The cost will just escalate. So it is not going to be possible for the US to make everything in their country itself, right? And some of the manufacturing spaces that we are talking about in India currently, where the government is more focused on, those have hardly anything to do with the US, because those are the things we are currently exporting. Now, say mobiles, the EMS, the PLI scheme, we were hardly exporting. All we were doing, we were importing either from China or some other countries into the country. And obviously, we were losing the foreign exchange on that. All we are trying to do is, for our own consumption, first, let's make in India. And then for some of the consumption of the world, can we make an export? And within that also, we are trying to just take some market share away from countries like China, Taiwan, and some of the Southeast Asian countries, and we are nowhere close to even double digits in any of these things. So I think the US threat to Indian manufacturing is a little overblown, and we don't really believe that that's going to make too much of difference to companies. There may be a few companies that are more exposed to the US, which will need to recalibrate some of their strategies. But otherwise, as a whole, as a country, uh, in the new economy, in the new segments that we are trying to build in manufacturing, we are not really dependent because we are not exporting to the US as such.
For that and giving a better clarity on that particular front. Thank you so much, Rohit, as always, for joining on the show and actually helping our viewers when it comes to actually looking at these sectors in the context of budget. Thank you so much. Pleasure having you on the show. But let's stick with the budget theme, and here's an